What if I told you that just one smart move today could make your family rich for the next 100 years? Most people chase money, but the ultra-rich chase assets, the kind that pay them forever. 20 powerful assets have built dynasties that survive recessions, wars, and even financial crashes. But here's the catch. 99% of people ignore them. Stick with me because by the end of this video, you'll know exactly how to plant the seeds of generational wealth before it's too late. Did you know that 70% of rich families lose their wealth by the second generation? And by the third, almost nothing is left. The secret? They don't own the right assets. In this video, I'll reveal 20 of the most powerful, recession-proof, income-generating assets that have made families rich for generations. And trust me, number 18 is something even the wealthiest people are just now starting to buy. Now let's get into the 20 key assets that have made families like the Rockefellers, Rothschilds, and modern billionaires untouchable. 1. Income-generating real estate. If you want to build wealth that lasts for generations, you need assets that keep making money without requiring you to constantly work for them. That's exactly what rental properties do. Unlike stocks, crypto, or businesses that can crash overnight, real estate is a solid investment that tends to grow in value over time. Plus, people always need a place to live, which means there will always be demand. One of the biggest advantages of rental properties is the monthly passive income they generate. When you own a property and rent it out, tenants pay you every month, covering your mortgage and putting extra cash in your pocket. Over time, as rents increase, your income grows while your mortgage stays the same, meaning more profit for you. Another reason real estate is so powerful is appreciation. A well-located property typically increases in value over the years. A house you buy for $300,000 today could be worth $600,000 or more in 20 years. That's money you can tap into whenever you need it, either by selling or refinancing. And unlike cash, which loses value due to inflation, real estate tends to rise in value along with the economy. Speaking of inflation, rental properties actually benefit from it. As the cost of living goes up, so do rents. But if you lock in a mortgage at a fixed rate, your payment stays the same while your rental income increases. Over time, inflation makes you richer because your property generates more cash flow while your loan amount shrinks in real terms. Then there are the tax benefits. The government offers real estate investors tons of tax breaks, allowing you to deduct mortgage interest, property taxes, repairs, and even depreciation. These deductions significantly lower your taxable income, helping you keep more money in your pocket. That's why wealthy families use real estate as a tool to reduce their tax burden and build wealth faster. But the most powerful part of real estate is its ability to create generational wealth. A well-bought rental property can pay your kids, grandkids, and even their kids. If structured correctly, your family can keep collecting rental income for generations without ever having to sell. And the best part, your tenants pay off the mortgage for you. By the time your kids inherit the property, it's fully paid off, and they're collecting pure profit every month without lifting a finger. The good news is you don't need to be rich to get started. Many smart investors begin with a small duplex or single-family home, renting out part of it to cover the mortgage. Others use house hacking, living in one unit while renting the other, to make homeownership more affordable. Some even leverage other people's money, OPM, through creative financing strategies. The key is to start as soon as possible. The sooner you own real estate, the sooner you lock in all these benefits, and the easier it becomes to build wealth that lasts for generations. That's why the richest families own real estate and never sell. If you buy right and hold for the long term, a single rental property can turn into a lifetime cash machine for you and your family. Want to learn about more rare and powerful assets that can make your family rich for generations? Stick around, because we're just getting started. Second, index funds and ETFs. If you want to grow your money without stressing over stock market ups and downs, index funds and ETFs are one of the best ways to do it. Even Warren Buffett, one of the greatest investors of all time, says that most people should invest in the S&P 500 instead of trying to pick individual stocks. Why? Because it's a simple, low-risk strategy that has proven to work over time. The S&P 500 is basically a collection of the 500 largest and most successful companies in the US, including giants like Apple, Microsoft, Amazon, and Google. Instead of gambling on one company, you're spreading your money across hundreds of them at once. This diversification helps balance out losses. If one company underperforms, others can make up for it. Historically, the S&P 500 has delivered average returns of around 8 to 10% per year, making it one of the most reliable ways to build long-term wealth. Investing in individual stocks can be risky because no one can predict which companies will win or lose in the long run. That's where index funds and ETFs, exchange-traded funds, come in. These funds automatically track the S&P 500, so instead of picking stocks yourself, you're investing in the entire market. They also come with low fees, meaning more of your money stays invested and compounds over time, instead of going to fund managers. Buffett's advice is simple. Invest in a low-cost S&P 500 index fund and leave it alone for decades. No market timing, no complicated strategies. Just let time and compound growth do the heavy lifting. The market may have ups and downs, but over the long run, it has always gone up. The earlier you start, the more your money grows. Getting started is easy. You don't need thousands of dollars. You can start with as little as $50 or $100 using platforms like Vanguard, Fidelity, or Schwab. Just search for an S&P 500 index fund or ETF. Popular ones include VOO, SPY, and FXAIX. Start buying shares regularly and keep investing no matter what the market is doing. The longer you stay invested, the greater your returns. You don't have to be a financial expert to build wealth. By investing in the S&P 500 through index funds or ETFs, you're using the same simple yet powerful strategy that has helped millions of people grow their money over time. Stay patient, keep investing, and let compound growth work in your favor. Third, dividend stocks. If you want to earn steady cash flow without having to sell your investments, dividend stocks are one of the best ways to do it. Some of the world's biggest companies, like Coca-Cola, McDonald's, and Johnson & Johnson, have been paying their investors cash every single year for decades. And the best part? You don't have to do anything except own the stock. Dividend stocks are shares of companies that pay you a portion of their profits on a regular basis, usually every 3 months. Think of it like getting a bonus just for holding on to your investment. Some companies like Coca-Cola have been paying dividends for over a century, increasing their payouts almost every year. That means if you invest in strong dividend stocks and hold them long enough, your passive income can keep growing for life. The real power of dividend stocks is that they provide consistent income, no matter what's happening in the stock market. Even if stock prices go up and down, well-established companies keep paying dividends because they generate steady profits. And if you reinvest those dividends instead of spending them, your money compounds over time, turning small payouts into massive wealth. Not all dividend stocks are worth investing in, though. The best ones have a history of increasing their dividends every year, even during recessions. These companies, known as dividend aristocrats, include brands like Pepsi, Procter & Gamble, and 3M. A good rule of thumb is to look for stocks with a dividend yield between 2% and 5%, along with a strong track record of consistent earnings. Getting started is easy. You can buy individual dividend stocks or invest in dividend-focused ETFs like VYM or SCHD, which spread your money across multiple high-quality dividend-paying companies. If you keep reinvesting your dividends, your wealth builds even faster, and over time, those payouts can become a steady source of passive income for life. Dividend stocks are one of the simplest ways to build long-term wealth while earning money along the way. Companies like Coca-Cola have been rewarding their investors with cash payments for generations, and with the right investments, you can set yourself up for the same kind of financial security. 4. Private equity and business ownership. If you look at how the richest people build their wealth, you'll notice one thing. They don't just work for a paycheck. Instead, they own businesses or invest in private companies that grow in value over time. This is how they build real, long-term wealth instead of just trading time for money like most people do. Owning a business gives you control over your income. When you work a job, there's a limit to how much you can earn. Your salary depends on your boss, your company, and the hours you put in. But when you own a business, there's no cap on your income. Your earnings depend on how much value you create, and the more your business grows, the more money you make. That's why the wealthy build businesses instead of just working jobs. Private equity is another powerful wealth-building tool. This simply means investing in businesses that aren't publicly traded on the stock market. The rich do this all the time, whether it's buying stakes in small companies, funding startups, or investing in established private businesses. Unlike the stock market, where prices swing up and down daily, private businesses often grow steadily over time, creating massive returns for those who invest early. The best part? You don't have to build a business from scratch. Many wealthy people buy existing businesses, things like laundromats, car washes, or online stores, because these already have customers, cash flow, and systems in place. Instead of starting from zero, they take something that works and make it better. This is how many self-made millionaires get started. If you want to break free from the cycle of working paycheck to paycheck, owning a business or investing in private companies is the way to go.